Hey everyone, welcome back to Stock Market Weekly. I am your host, Evan Medeiros. This is the show where we catch you up on the notable moves across financial markets through the lens of technical analysis. We're publishing every weekend, every Friday. We got new episodes going out, so make sure you are subscribed to the channel. Tune back in on the weekends so you never miss an episode. So you're always prepared for the week ahead. Let's get right into it. Let's not waste any time. It was a pretty choppy week out there for stocks. Stocks, broadly speaking, kind of closed flat to slightly higher across the board. There were two main kind of catalysts I think the market was chewing on this week. The first was the Fed meeting, and Jerome Powell was out on Wednesday giving some remarks and comments on the outlook for future cuts. Didn't really rattle the cage or come, too different than market expectations. I think generally speaking, the market's on a 2 rate cut anticipation for later this year, with maybe the first one around June. Jerome Powell kind of speaking towards the data dependence, waiting on the economic data, don't want to cut too quick type of rhetoric out of the Fed right now. And the markets seem to at least rally on the day and seem to like the words, the presser, the conference that the Fed had out on Wednesday. The second big event was NVIDIA, is one of the largest companies in the market right now. There's a lot of attention on their GTC event, which speaks to the outlook of AI demand, chip demand, quantum now as another area that they're getting into. And, Jensen Huang certainly talked up his stock and as one would expect, in a nice rosy outlook. I think they had their new Blackwell Ultra chip that they talked a lot about, and getting into the quantum side with some office space opening up in Boston. So markets kind of sold NVIDIA off this week, but it had a big rebound last week. So all is to say, it was kind of status quo on both of those two big events. The third, kind of lingering elephant in the room, of course, now is tariffs, which is basically out of every investor's mouth. Every other word now is tariffs and the impact and the uncertainty that they're bringing. But it's a staple conversation item now. Everybody is aware of the sort of dislocation that the problem of the uncertainty that tariffs bring. And so I think, to a large extent, it's it's relatively priced in right now, unless you see dramatic swings one way or the other. I do want to shout out our sponsor, IBD Investors Business Daily. They're doing their once a year free access to MarketSurge. So I encourage you to check it out. It's for this weekend only. No credit card, no anything. Just drop an email and make an account for free and try out that MarketSurge platform and do some research this weekend. Take a stroll through the relative strength line, take a look at some company earnings, take a look at the data sets that they have curated here along with their sort of growth 250 lists. And they recently had Mark MINERVINI on for a webinar. Subscribers here can get access to that. I heard it was a very popular webinar just a few days ago. So check it out. Drop your email. We're going to put links in the description of this video, but try out MarketSurge for free while you can and have some fun with that. And now let's get into the show. All right, let's get right into it today. Look at these 1 week returns. You can see green across the board. Nice to see some green for a change of pace here. Dow Jones led the charge up 1%, followed by the S&P up 0.5% and the Russell up 0.4%. Nasdaq coming in 0.25% higher. Not too shabby, not a strong rebound. Again, lots of chop and indecision, but we're going to talk about that as we get into some of these charts. You can see volatility also down about 2 or 3 points across all the major indices. Let's take a look at sectors here. We definitely had some standout winners. The energy sector once again here was shining pretty bright here, up 3%. Financials up almost 2%, and healthcare up 1.15%. So a little bit of a decent spread there for sectors that were working themselves up. Staples, materials, utilities, all basically flat, marginally down this week. But almost, generally speaking, you had a pretty good green week across the board. If we take a look here at our smart trend filter indicator, this is something we have built for TC2000 in TradingView. You can see that we've got lots of cross currents, lots of indecision, kind of, mostly pessimistic to neutral, trying to turn higher here in some of these individual sectors. We haven't quite repaired a lot of the technical damage that we've seen in the market over the past month, but you can certainly see that energy it has made the turn back up. You've got a couple of green dots printing here now, finally, after Tuesday's session, moving back to a bullish trend. You can also see, financials, healthcare trying to work themselves back up as well. So need a little bit more time, a little more proof that buyers can be stepping in here, but some of these sectors are trying to make the corner. If we take a look here at market breadth, this is encouraging in the sense that, hey, at least it didn't get worse this week, right? If we look at the 52-week low list, which has been the dominant list, there's been more stocks hitting 52-week lows in the market than there have been stocks hitting 52-week highs. You can see that this list did, kind of shrink down, and we didn't see any more expansion or any flare up, or even just, hundreds of stocks per day making new 52-week lows. So that's mildly encouraging. You see a little slight uptick here in the number of stocks hitting 52-week highs, but all is to say kind of choppy, subdued levels right now, and we're going to want to see, more evidence here, one direction or the other. So again, kind of just a neutral outlook here. Bears still clearly in control based on the action here from early March, but again, a little more tame this week. Now, if we take a look here at our macro slide, and we take a look at what's going on here outside of stocks, and we take a look at the dollar index, you can see that we are now, starting to inch back up here in the dollar. The dollar got pretty severely oversold. This coincided with a lot of strength and stimulus overseas, primarily in Europe, Germany, that really kind of offset, I think, that dollar index pair, because the dollar index is heavily weighted towards the euro. And you can see a little bit of a rebound right here, but still clearly in a intermediate term downtrend that the dollar has been in and is still in since basically, late 2024, early 2025. Yields were down relatively across the board. That's good to see as well. And if we look at commodities here, you can see copper having another big week here. We missed this, didn't talk about it last week, but Dr. Copper, as it were, is a good sort of indicator of what's of a potential recession that is on the horizon here, generally speaking. When you have that type of industrial demand that is really falling off a cliff, you tend to get copper prices going lower. And we're not seeing that, right? We're seeing copper continue to make new relative highs here, another big week for it. And that is, constructive as we start to, put out the R word for recession as being a risk to this market. So copper moving up nicely. Oil had a move up this week. We're going to talk about that. Gold hit new highs once again, and Bitcoin was down. Silver was down on the week. So let's get into some of the technical pictures here. Let's start it off with the S&P 500. Now, as we recall from last week, the S&P 500 is coming off of 4 down weeks, pretty much in a straight line, as straight of a line as one could kind of draw on their charts. And we talked about the tail last week. We talked about the bulls trying to make a stand on that Friday session, and they didn't quite build on it this week. We were up this week 0.5%, but you can see that first off, the range compressed this week, which I think is a good thing. You don't want to see volatility continue to expand when you're trying to make a turn or really kind of stick a landing here. You want to see kind of that volatility kind of come in, compress a little bit, put in some type of confirming or some more evidence working sideways here that buyers are certainly stepping in, and we're getting that. We're starting to see early signs of that right now. Now, we're absolutely not out of the woods here, and I'm not calling any bottom or trying to be too overly optimistic, but I do want to speak to the fact that it was a bit of a compression week here. If I look at a daily time frame of the action, this was basically all right here. I mean, this was what we did this week. It was sideways, chop, chop, chop. We couldn't really get anything going in either direction. The market just hung in there going sideways. Now, it was quadruple witching, so we had the big quarterly OPEX this week, and maybe that pinning action and maybe some of the contracts kind of getting stuck at this level helped kind of keep the market locked in there, barring any severe exogenous events. And we didn't quite get anything that really rattled the markets. So maybe it was just an excuse with OPEX and some of the flow dynamics to keep us kind of pinned here. This would be telling next week when we come in kind of free of OPEX. It's the last week of the quarter, so there could be some, additional flows that we're going to start to see next week. But all is to say, we are ready to move, right? We have gone sideways here 5 days in a row. The VIX just, came down from north of 2025 area. And so there is some pent up energy being kind of coiled up here. And I think we need to be on alert next week. Now, here's the thing that we can start to preemptively think about. If we go to we'll go back to the daily chart. What you're going to see this week when you start to go through a lot of these different charts and you do your homework is you're going to get lots of things that are starting to take the shape of that classic dreaded ominous looking kind of bear flag or some type of wedge that is starting to work itself higher. You've got the big impulse down move from 4 weeks, and then you get this grind up choppy kind of lethargic action higher that eventually rolls over, right? That's the risk. That's what would be the worst case scenario that we're setting up right now. Doesn't seem like it's ready to kind of give up and roll over, and that's evidenced by Friday's session. Notice we had this gap down on Friday, we probed lower, and the bears basically failed, right? There were no selling, there was no aggressive sellers down here that kept this market rolling over or breaking down from this flag pattern, right? Because even you could have came into Friday's session really like this, and you could be saying, oh, here's the Friday gap down, this is going to roll us back over, but that didn't happen, right? So buyers are still kind of in here. They're showing that there's some opportunity, there's some value in some individual stocks. And so right now it looks like, we'll go down to even shorter time frame, which I hate going down to a intraday time frame, but I think when you get very volatile markets, it helps. And you can see here in the S&P that markets are trying to kind of hang in here, build this base. And next week, I think what you're really going to be paying attention to is this 5,700, 5,710 in the S&P 500 on the upside. If we can push through here, fill some gaps, I think we could easily get back up to this 5850 zone right in here, right from March 3rd, 4th, 5th, kind of the top end of this range. And I'm looking at this level right here as kind of a second leg push up. And then it gets harder, right? That's where then, okay, the rubber meets the road. Can this market hang in there? What's happening with tariffs? What's happening with econ data? Those are going to be the big, kind of muscle movers of how this market is going to trade, in my opinion, going into April. I think it's going to be very kind of, headline dependent, and it's a very difficult market to trade because it's choppy and things turn on a dime. But without getting more tariff clarity, without getting more clarity from the Fed or just econ data in general, this market, I think, is going to have a tough time to truly sustain a rally. But we could certainly trade higher for a trade, right? For working off oversold conditions, finding some individual value, and seeing traders kind of come into this market and push us back up. So my expectation looking at this is that it feels like the market could make another push here up into the 5,800 range, maybe as high as 5,850. But if, again, we get hit with escalating tariffs or anything that really derails or puts more risk, puts more, just uncertainty into this market environment, then you run the all bets are off scenario, and we could be rolling over to these lows sooner rather than later. It feels like these lows were a little unsettled. It doesn't feel like this was capitulation. I said it last week that this didn't really feel like capitulation, and I still don't think it does. I still think ultimately we would want to retest those levels here. As a good technician always looks for kind of a second test of these big important levels. And so I wouldn't be surprised if, again, we floated higher for a little bit longer, maybe for a week or two, work off those, more extreme oversold levels, and then, make that leg lower. See some of those bear flags kind of break down, or those channels or those lower highs, right? So that's kind of the way I'm looking at it right now. Again, S&P 500 had a 10% correction, did it in a straight line. We're starting to, bounce a little bit. I think you've got some clear levels to use. 5,600, if we start rolling over from there, if we come into next week and we just start losing the lows from Friday's session here at 5,600, then Evan's wrong in his assessment of, kind of grinding higher a little bit. We need to go retest lows quicker. There's some more sellers that need to get flushed out of this market still. So that's the way I would look at it. You got some levels to work against. It's not just a straight down market. That's at least encouraging. If we take a look at the Nasdaq 100, you kind of have the similar action here. Again, you had a steeper correction. You were down about 13.5%. But if we go to a short intraday time frame here, sellers, buyers, they really just battled it out sideways and a lot of choppy action this week. And again, I think you're looking at 485 as a breakout move to the upside. Come and fill some of these gaps, maybe get back up to this 500 area here in the Qs, which was kind of the big breakdown level, and then really see, okay, what's this market made of and what's happening here on the economic front. Russell 2000, again, still just kind of lost in no man's land. I don't have any strong opinion here. I just think it's going to perform like beta. No real, interesting analysis I have on the Russell 2000. So that's the way I'm sort of looking at things. If we go to gold here real quick, because I just want to not forget this. We made, again, new highs here for GLD. Throw in some Bollinger Bands. You can see that gold has been riding the upper weekly Bollinger Band here and continuing to be the best place to be allocated this year. It's up 15% so far in 2025, and that's after a 27% month in 2024. So gold is the new equities here, and it is continuing to move higher. Again, it gets tougher and tougher to chase. So I'm not advocating new positions here, but certainly a trend that continues to pay and work right now. I want to talk about oil as well. You finally saw a little bit of a turnaround here. Again, you had kind of this compression going on here with oil. It started to make the turn, starting to try and work itself up a little bit, but it's still pretty much in this downtrend that's been in place all year long. So it's got more work to do. It's got more proving to do. But again, at one point this market was worried about inflation. Now it seems to exclusively be worried really about growth right now, with oil staying down here, and the longer it stays down here, really get a lot of those inflationary pressures, which is mostly oil driven. Really, a lot of it you tie back to the price of oil. Then you're going to start to get more of the coast is clear in terms of the inflation front. So VIX here, so you can see down, really stair-stepping methodically down here, sub 20, got as high as 29 or so, and it's just been kind of falling lower here. Again, that's maybe giving a little bit of crowd cover to the market's grinding up here as volatility comes out of this market. We'll look quickly here at the Mag 7 stock. So you can see, again, a pretty down to negative, mostly negative week here. NVIDIA was the big winner last week. It was down 3.25% as the biggest loser this week for Mag 7, and Apple rebounded. Apple was the big loser last week. So it was kind of just a swapping places for NVIDIA and Apple. Most of the Mag 7 stocks here still looking pretty terrible. Microsoft now maybe starting to eke itself as maybe something that's tradable here if it can hang on to the lows back from April 2024. Now that it's kind of getting back above 390, I guess maybe there's a trade to back into this range here. Amazon moving sideways. There are certainly pullbacks here. They all had pretty much 20% corrections, bear markets, if you will. And so, some signs of life, a bounce, dip buyers coming in naturally when you hit these kind of hallmark levels of 20, 25% corrections. You're going to get people that have been sidelined or interested to start DCAing and get into it. Tesla looks like it's trying to round the corner after a brutal 40+% correction. So this again speaks to perhaps the fact that the market could float higher here for the next 1 to 2 weeks before we get that potential secondary leg down. That's kind of the way I'm viewing things right now. Of course, my opinion changes every single day, and I do these videos every week, and we'll relook at the data. But for now, NVIDIA, again, kind of just back into this range, just technically doesn't look all that interesting. I suppose as long as it can stay above maybe this, 114 area here, the lows from February, then maybe you got something to work with, and again, push back up into the 130s, into that old range. Couple of other standouts this week, but really kind of just pulling hairs is Nike off earnings, down 5.5%. The stock's been in a bear market for quite some time now. It doesn't look like it's changing anytime soon, but maybe you're starting to see some value here. Maybe you're getting towards some washout capitulation levels, but I don't have a position. I'm not really interested in it either. Boeing also had a notable week. I know that was up 10% this week. Again, it's been kind of a tough spot to be as well in terms of the multi-year picture, but getting some signs of life here with an uptick in volume. And there's plenty of other stocks this week on an individual basis you could start to look and fish from. So that's it. That's what I have. A very choppy week. Again, if this is a very uncertain time for you, your strategy, it's a good time to take a little break and a breather, because it is a very headline driven market that really needs to get some more clarity on some things before I think we see any sustained move to the upside. But a trade to the upside feels like is underway. We'll see what we get. Don't forget to take advantage as well of MarketSurge. Take a look at some of those individual stocks, go through their Growth 250 stand, watch the MINERVINI interview as well, and I'll put those links in the description of this video. So that is it for me. Thanks as always for tuning in every Friday. Don't forget to subscribe and like the show if you liked it, and we'll see you in the next video update. Take care.